Hey, it's Larry Gonzalez with your housing market update for the second to the last week of Halloween, and it's pretty scary right now. We don't need to wait till the 31st of October just to see how scary it is, because where have all the homeowners gone? Where have all the home buyers gone? They're not around. We're going to get into that. Let's get into the big three, though. Prices are steady. Inventory is up. That's great for buyers. Interest rates are up. That's not so great for buyers, but you got to look at the bright side of things. But you know what? Some people aren't. And I'm going to show you here in a minute that existing home sales for this year are pretty bad, pretty bleak. And you can see what happened this last month. In September, those numbers were out. Rates shot back up. We'll get into that. And initial jobless claims, they're pretty steady. Not a lot of good news. It's kind of conflicting a little bit. Initial claims up, initial claims down, continuing claims up. So we'll get into that too. All right, so let's look at existing home sales. What's that song? Where have all the home buyers gone? I'm not a singer. That's why I do this. So there's no cowboys out here. This is pretty bleak. We are at a 14-year low in existing home sales. If you look at this chart, you can see that we are trending. The expectation is that we'll be at 3.84 million homes sold. These are existing home sales by the end of the year. That is going to be about as low as we've had since, or the lowest we've had since right around 2010. And, if rates continue to go up, we may even be lower than that. It might be the early 90s be the last time that home sales were this low. And that says a lot about kind of really just how exhausted home buyers or future home buyers are with interest rates being up and home prices staying steady, even going up in certain areas. So, the positive side to all this, so there is now more inventory of houses than there have been at any time since before COVID. In 2024, there was this expectation that home sales would be better than they were in 2023, but right now we're just not seeing that. And if rates stay elevated through the rest of the year, we're definitely not going to meet where we were at in 2023. So let's take a look at the existing home sales report that came out for September. We can see that we are now at a 14-year low in existing home sales again since 2010. This is the second month in a row where we have had a decrease month over month in existing home sales. We are now at a 4.3 month supply of homes. That's up 23% year over year. And the average, or to say we have a balanced market, we would need 4.6 months. But I will tell you this right now: in most of the U.S., I even have a friend who actually is a realtor in Monterey, and she is saying that home buyers are getting seller credits. They used to never do VA loans there in Monterey, in California. And now they're like, heck yeah, we'll do a VA loan. And they're getting seller credits, and they're getting buy downs, and they're paying the closing costs. And who would have thunk it? In California, in Monterey, California, of all places. Median price down on existing home sales, down to $405,000. That's down 2.3% month over month. So we're seeing a slight decline, although we are up 3% year over year. And then 28 days on the market, that's a big number, right? It's up from 26 days on the market. So we're seeing homes sit longer, but you know what? They're still less than 30 days. That's pretty strong there. It still shows a strong market. First-time home buyers account for 26% of all purchases last month. Cash buyers up to 30%. From 26%. So hey, there's still a lot of people with cash, and you know what? They see the value of real estate, so they're buying homes. Investors down 16% from 19% the previous month. So let's take a look at new home sales. All right, new home sales. These are people who are going into contract. Doesn't mean they're getting the keys. They didn't get the keys in September. Matter of fact, there were the 470,000 homes for sale. Only 108,000 of them were actually completed. We were up 738,000 expected year over year. That's a 6.3% increase. So that's good. The median sales price is up a little bit for new home sales, up to 426,000. So shoppers who, what September shows though, let's also remember, September shoppers, people who signed contracts in September, they were riding those low rates that we had seen from the end of July through September. So really, October rates have gone up. I'll show you that in a minute. So what we're going to see in October may not look as good. It may not paint as rosy a picture for new home sales in October because rates were high all through October. All right, initial jobless claims, I talked about that earlier. Initial jobless claims for last week dropped 15,000. These are initial claims down to 227,000, so that wasn't good. But continuing claims are up 28,000 to 1.897. That is the most, 1.897 million, which is the most that we have had since November of 2021. Which just goes to show owners or employers do not want to let go of their people. But once people are let go, they are having a hard time getting a job. So that's why you see continuing claims going up. Let's take a look at VA rates. All right, VA rates 6.4%. We have not had interest rates at 6.4% that high since the end of July. End of July, we had a lot of different reports that showed a weakening economy. We had the Fed basically say, we had a jobs report that showed that unemployment went up to 4.3%. And the Fed was saying, gosh darn it, we should have probably lowered the Fed funds rate. And then we basically knew right after that they were going to lower the Fed funds rate. And then that whole from July through September 15th, we saw interest rates come down. You could see that on a chart. Well, guess what? Ever since the Fed lowered the Fed funds rate, what has happened? Interest rates have gone up. Yes, they have gone up. It doesn't make any sense unless you understand the market. And that's what I look at every day. So right now, 6.4%. And really, they've gone up every day. Interest rates have gone up every day since October 15th. We need this month to end, people. And next week is going to be crazy. All right, before we get into that, 3 things that are hurting rates right now. Because there wasn't a lot of economic news coming out. Certainly no jobs reports, no inflation reports, but very strong gross domestic product. 3% growth. Economy is still strong despite these hints that maybe it isn't as strong. We have some earnings coming out because we got the end of the quarter or new quarter, end of the quarter reports coming out from different companies. And you're seeing that some companies like Starbucks, Hilton, those numbers are being low, coming out lower than what they were expected. We also had a great, super strong September job growth, and unemployment went from 4.3% down to 4.1%. Again, strong economy, lower unemployment, near 50-year all-time lows. Remember, we were at 3.6, 3.7% just a year ago. And then we also had strong retail sales, which shows that people are still spending money. They're buying shit left and right. And guess what? They're probably doing it on credit cards because our credit card debt is also up. But you know what? People are still spending money. That makes for a strong economy. Whoop! Interest rates are going up. All right, and they're likely to stay elevated until next week. And who knows what's going to happen next week. Next week is going to be crazy. And I'm not just talking because all the jack-o'-lanterns and all the craziness of Halloween. There's a lot of stuff going on. All right, we got final inflation report, the PCE on Halloween. And then right around there, next week is jobs week. All right, so we're already into the jobs week for October. And that is going to have a really big impact on rates. It's super crazy. We'll see what happens. I have no idea what's going to happen. I'm not even going to guess. You know what? I just don't know because I don't trust the reports all the time. But you know what? I don't wait for those reports. I lock in ahead of time because I know that the worst thing that could happen, instead of getting 6.4%, maybe now we're at 7%. And guess what? Maybe my client doesn't qualify anymore. And that's something that I'm always looking out for. I want to be safe for my clients. Super important to protect my clients. Now, if they want to gamble, hey, I'll let them, but I always recommend the conservative approach. All right, let's take a look at the 10-year Treasury, all right? 10-year Treasury. Last week, we got above the 100-day moving average. 2 weeks ago, we went above the 25-day and the 50-day moving average. Last week was a 100-day moving average. Guess what, folks? Now we're above the 200-day moving average. You can see that last red dot there, or the red bar there, shows that we are above that blue line, that 200-day moving average. And we have not had the 10-year this high. It's almost 4.2%. We haven't had it this high since August, or since really that jobs report that came out in the end of July that showed unemployment going up to 4.3%. This is pretty bad news, and we need that 10-year Treasury to go down. Again, 10-year Treasury and the 30-year fixed rate mortgage, they have a close dance together, all right? And we want them bumping and grinding close, but they're not. They're like dancing together, like their sister Mary Bernard Joseph is watching. They're not like this. They're like that when they're dancing. So it's a little, about 2.5 point difference between the 10-year Treasury and the 30-year fixed rate mortgage. But I'm telling you what, man, this 10-year Treasury, we need to go down. And you can see that next line, that 4.332% line, there's a lot of room to go up. And if we get a bad report, we may pop that 4.3 and get on up into the 4.5% range, and that would certainly not be good for rates. as we get into the Thanksgiving month, my birthday month as well. All right, let's take a look. What does this mean? What does this mean? Well, hey, guess what? Buyers they're sitting on the sidelines. Mortgage applications dropped 5% last week. They're still at 3% year over year, but you know what? We're dropping 3 weeks in a row. Refinance activity has fallen 8%. You know, I don't think anyone's refinancing right now or locking in right now unless they've been sleeping under a rock all this time. You know, this is actually the 4th week in a row that we've had a drop in refinance activity. And we're still at 99% year over year, but still a lot. You know, that refinance train has left the station, folks. And hopefully it'll come back soon. And your key is just be ready. Get the application in and just be ready to lock and talk to your loan officer. Figure out what that strike rate is. You are going to say, I'm going to lock in at this rate. I'm going to take this savings. All right. I'm not going to be greedy. Get that strike rate. Get with your LO. Get with your lender. Figure that out, and let's get you ready to lock. All right, sellers, hey, stay positive. Seller credit's on the table still. And I got some clients who they don't want to give a credit. You know what? And they're actually in contract. They don't want to give a credit for repairs. Well, guess what? If you're giving up a $10,000 credit, you don't want to give up that $10,000 credit. Okay, so they back out. Well, guess what? People ain't buying homes right now. So it may be another 3 to 6 months before you sell that home. What's your mortgage payment? If your mortgage payment is $3,000 a month, you know what? That 3 months you didn't sell your home, guess what? That's $9,000 you should have just given the credit, taken the money and run. All right, be very smart. Don't be greedy. All right, especially if you haven't taken care of your home, you got to fix an AC. Damn it, fix your damn AC or give them a credit. All right, and get out of there while you can because you just don't know. You don't know where the market's going. I'm a positive. I'm an optimist, but I'm also a realist. And right now the market's not looking too good for sellers who are being stingy. All right, don't be greedy. All right, places like Mililani, Kaneohe, and Kailua, you still don't really need to give credit, especially if your home is priced right and it's been taken good care of. All right, that's all I got for you this week. You guys have a great week. Have an awesome weekend. And boy, next week, I can't wait to talk to you. It's going to be a lot of good news, I hope. And hope it's not a course of action, but damn it, I want some good news. All right, talk to you later. Bye.